Hey everybody, welcome. Today we're going to take a look at the Bitcoin price over the last 14 years, and we're going to run a logarithmic regression trend line over the data. Okay, so continuing our theme here of analyzing the different regression trend lines that we can draw over data, particularly price data. We've been looking at gold, we've been looking at Bitcoin. Today we're going to look at Bitcoin with a logarithmic regression. Remember the four basic types of trend lines: linear, logarithmic, exponential, and power. These are the four basic trend lines we're looking at, and we're applying them both to gold over the last 50 years of price action on a monthly basis, and we're applying them to Bitcoin over the last 13, 14 years of price action, 14 years of the whole Bitcoin system. And we are looking at daily frequency for that. So here's a logarithmic regression. And before we get to the data, as always with this little series, let's take a look at the pre-examples, just the basic curves of how they look. I showed you this with gold. This is basically how a logarithmic trend line would roughly look on a linear scale. It doesn't have to take this slope, of course. It depends on where the data falls that it's trying to map, but it basically will gradually grow faster at the beginning and then slower at the end. Now with Bitcoin, it helps to look at the data on log scale, simply because it's been growing so fast over the last 14 years. And this is not just concerning price. This can be hash rate, difficulty, address growth, many things. It helps to look at log scale to really get a sense of the data. And of course, with price as well, log scale helps. But when we draw a logarithmic regression over the data, what the example we just showed before with that sort of gradual log curve becomes much more pronounced on log scale at the beginning. So you see that again, the y-axis is log scale now, so it's an order of magnitude higher. Each level up you go, we see that here, price being the dependent variable on the y-axis, $1 is already halfway up the chart. And if you look at the x-axis, where we get to time 1 or period 1, between period 1 and 2, roughly $1 hits if we look at this on linear scale, but see how fast the curve needs to grow to hit that on log scale. So it gives you a sense of actually how fast things may be growing on log scale compared to if you look at it on linear scale. Obviously, there are things that grow very fast in nature. Bitcoin is one of them at the moment. And it has indeed, in early years, really been looking like logarithmic growth for many of its data sets. But is that continuing? That's what we want to talk about today. So one more chart before we get back to the data. I want to show you one more image from 2015. And this was actually created and posted to the Bitcoin Talk forum by the infamous user Trolololo. He popularized in the early years plotting a regression trend line over the Bitcoin price. And to my knowledge, he was the first person to do that. And it sort of put things in perspective for a lot of people about how fast the price actually was growing compared to other things. He started that, I believe, in 2014. This is not the first chart that he posted, but I want to show it because I think it's helpful to understand a few things. So this is the price in green that he posted, and you see it only goes to mid-2015 when he posted this chart. And then you got the trend line that he posted, that he created himself on top of this price and based on the price action. So focus on what's in the red here, the red line. And you see that it's May 28th. He posted the chart, ran the data, ran the numbers, and he called it a logarithmic regression curve. The R squared is 89%, actually 90% if you round. So as we talked about in prior videos, if you get an R squared that's close to 90%, traditionally in statistics, that's a pretty good result. Now you do have to be careful with R squareds on non-linear data sets, and this indeed is a non-linear data set. I'll talk a little bit more about this as we progress through this little series of looking at these different regression trend lines, but R squared can be misleading if it's on log scale. So you at least for the purpose of this video, you just want to do an eye test and see actually if it looks like it does fit the data. And we don't have to get too scientific here. We can tell that indeed this red line does fit the data roughly for the first 5 years or so when Bitcoin had a price. Now, he has similar data that I have. Of course, my data might be slightly different. I'm sure it is slightly different, especially in the early days of what he has posted for the Bitcoin price. And my data, which I'll show you in very shortly, is of course going to be different, not only before then, but also after this. So this is really the main point I want to show you, and he illustrates this quite well, is that if you see the red curve, that's the current curve, the dark, the most bold red, let's say. And then if you look closely, you can see a little bit of a faded red curve there, and just below the years 2020 and 2021 on the top axis there, it says 2 months ago. So that's how trend lines work, right? He's taking all of the data up to 2 months ago, back in 2015, to draw that lighter shaded curve. But then up until when he posted it, which was mid-2015, May 28th, 2015, Bitcoin gave you that darker red, that more bolded red trend line. And trend lines can change. They always change. And so you can look at his trend lines over the years to see how it changed. And we can go all the way out to where we are today, the start of 2023, and see how trend lines have changed. One more thing I wanted to note, I have not been putting them on my videos, but they are and will be in the description in case you want to try to draw the trend line for yourself, is the actual formula. So again, I'll just put it on the screen so you remember the logarithmic price predicting formula, or anything that's predicting what's on the y-axis when you have one independent variable on the x-axis, in our case is time. The formula is y equals a plus b times the natural log of x, where a, as I'm defining it, is the y-intercept, b is the slope, and then the natural log of x is log at base e, or basically the natural log of x, or compressing the x-axis, the x variables, to give you that logarithmic effect, and drawing a log curve, and to see if it works for you, to see if it works for the data. So y equals a plus b times the natural log of x. So big props to this fella for putting this chart together. It's inspired many, many people to look at Bitcoin in a different way, and to analyze and to simply understand the growth of Bitcoin in its early years and until today. So we're going to do the same thing, same formula, logarithmic regression. We're going to look at it now and how it relates to Bitcoin. Starting with Bitcoin Pizza Day, Laszlo, in my data set, it's 0.4 cents per one Bitcoin was the first data that I'm putting. And then it's very sparse in this part of 2010. These early months right here, well, early months of price action, but actually mid-2010s, it's very sparse. Then you start to get a little bit more data from a couple exchanges, and Mt. Gox starts, around this time, and we have more data. But still, you're looking at Bitcoin sub $1 all the way up to mid-2011. So this is the price, and again, we will look at this at log scale, but let's stay in linear just for a second here to analyze this. Let's take off the curves themselves and just look again at the price action. Let's see how it looks until yesterday. I'm recording this on the 9th, in fact, 14 years after Satoshi released the client, the Bitcoin software, to the world. As of moment of recording, Bitcoin is pumping a little bit in price, but as of January 8th, $16,955 per Bitcoin, roughly on the index. So this is our price, and I had the regression up there so you can see how it looks. No suspense for this video. Let's put it back. And we see here R squared of 34%. 34%. So we'll talk about what that means just in a second, but we can see the logarithmic curve as opposed to the linear. Remember, this was the same on the gold chart. It has that upward sloping curve to it. And that's just the nature, as I showed you in those charts at the beginning of this video, that's just the nature of a logarithmic regression. So we can plot it out, we can run the numbers, and we can actually see if the data does fit well over this curve. And the best way to do that is this goodness of fit analysis R squared. We see it at 34% according to my calculations. So what does that mean, 34%? Remember, let's keep it very, very simple here. Let's not run into too much detail. You got to compare R squared with the all-time average. So the all-time average here is $8,500 per Bitcoin. $8,500 per Bitcoin, which is an interesting number, but did it mean anything here up till 2017? Nope, didn't mean anything because it was lower than that. And does it really mean anything here? Yes, it fell back down again in 2018, 2019 under the all-time average. Let's take away the trend line. It fell back down below the all-time average, but most of the time in the last few years, since COVID for sure, it's been well above the all-time average price. It's definitely trending, sliding back down this way towards the all-time average. Now, time will tell if we get there. But you're going to ask yourself, is that valuable? Does that help you? Because up until 2017, Bitcoin never touched that price. And then after 2017, it was above it. And yes, it did fall below it in late 2018, early 2019. But most of the time from COVID and on, it's been well above it again. So how helpful is it to look at the all-time average price of Bitcoin? It's again, this is not technical analysis. This is certainly not financial advice. But you might want to ask, how helpful is the all-time average? Well, in order to see how the all-time average compares to the price, we want to go back and look at our trend line and see if the trend line fits the data any better. So let's put the regression line right back in here. Here we have the regression line. And again, this goes negative, just the nature of it. It's not a problem, just like in Trolololo's chart. Negative $20,000 is his y-intercept. Mine actually, it's not shown here, I think, because it stops after the pricing data starts, but it's negative 14,000 here in 2010. And if you took it all the way back to the y-intercept, as I'm calculating, and he did as well, you started at the Bitcoin system, even though there wasn't a price, it's okay. The y-intercept is negative $100,000 in my, according to my calculations today. And that's just how it looks. That's the nature of how it looks. So it becomes positive here in late 2012, and then it grows. And we can see that it seems to take a curve. This upward sloping curve seems to look a little bit better than the average. But is it? Well, that's where R squared comes in. So again, without giving you the high-level statistical scientific proofs, the very simple way to interpret R squared of 34%, all it's saying is the data, the Bitcoin price, the thing we're trying to predict, we're trying to infer on the y-axis, the data, the price, moves with less variance around the logarithmic trend line than around the mean, with less variance. How much less variance? 34%. And that is the statistical, but also the easy way to sort of understand what that means is the price moves around the trend line with 34% less variation than the variation of when the price moves around the mean. And then the next question is 34% a good R squared? No, generally it's not. This is, again, that's not a correlation number, that's R. R squared moves between 0% and 100%. It moves between 0 and 1. And 34% is half as good on R squared as 68%. You can say those things, but generally the more that the R squared tends to 0, that's not a good sign for the statistical analysis. So 34% is not good. I will remind you that in our linear regression that we drew over the Bitcoin price, the R squared was 50% with the linear trend line. And also the price in the linear trend line analysis for Bitcoin was $26,183. Now, that's what the linear regression was predicting. Let's see what the price is on the logarithmic regression now. $19,208. So interestingly, the logarithmic price is closer to the actual price. It's closer, right? Because linear, remember, was $26,000 roughly. That line at this point, logarithmic, is 19,000. So the logarithmic curve is closer, but the R-squared is much worse. So over the whole period, over the long term, which again, this is what I'm trying to stress in these videos, is you can find a lot more, you can infer a lot more basically looking at long-term data than trying to think about, what the price of oil was yesterday at 8:30 a.m. Like, these are, if you want to play that game, go for it. But I'm more interested in the long-term data. So this logarithmic regression curve is actually worse than the linear curve of the same name that we drew over the Bitcoin price. Now, I told you we'd look at this in log scale. Let's look at it in log scale just to infer a little bit more with Bitcoin's price. Here's log scale. Okay, so now we can see I have base 10 as well. 1, 10, 100, 1,000, 10,000. Each level up is an order of magnitude higher by a factor of 10. Doesn't always have to be that way. It's okay. But that's what it is here. So now we can see a lot more action again with the price action. As I said in last videos, we can see more action about what's happening and how the log scale works. And, run the tooltip over, you can see, 50 cents here, then it's, $1 here, and then this first empty Gox hacked here in June 2011 hit basically $30 and then trended down here. You can see a lot more of the action. Now, this curve, it goes negative, and log scale doesn't really work well with negative. I can probably force that down through this axis, but I haven't done that with the software. Basically, the next point on this logarithmic regression is negative, so it stops when I look at it in log scale. It confuses it a little bit because log typically doesn't go negative. This is how it looks on log scale. So now remember back to that little chart that I showed you at the beginning of this video. This is the nature of a logarithmic trend line. It just shoots up very, very quickly on log scale and then settles out from there. So we can see that the trend line that I've drawn with logarithmic regression is much worse, actually, than Trolololo's in 2015. It doesn't look as good. It doesn't fit the data as well. And it's only a 34% R squared. So it doesn't look that great. And it's less of a statistically viable R squared than the linear R squared of 50%, looking at the linear regression trend line. So this is how it looks. This is the logarithmic trend line, and we can see that most of the time here, Bitcoin is actually, the price is under the trend line, and then kind of just like the average, it bumps up above at the 2017 boom, and then the 2018 bust, the puking, the dropping after mid-November 2018, and then 2019, it kind of rises up again above the all-time average, but it doesn't get above the trend line again until, let's check it out, it's right here roughly, November 2020, it gets back above the logarithmic curve, Let's take the average off just to see this again. So yes, it's trending right back down. So you might be thinking, well, it's actually pretty close now. The trend line says 19,000 and the price is, about 17,000. So it's pretty good, right? Not really. The R squared is only 34%. And over the long term, this doesn't really tell us much, right? I mean, we're not seeing the price action move around, up or down, around the curve. So it doesn't look that great. Now, we can change this. I want to say one more thing about the log scale here and the logarithmic regression. I could change the coefficients, and if you want to change the coefficients, feel free. You could change the point at which this intercepts the y-axis, which again, it's negative 100,000. Negative 100,000 is when it's going to intercept the y-axis, according to the basic coefficients that any statistical software will find for you. You could change that. You could also change the slope to try to make it meet the price more and overlap the price more. But in my opinion, I actually like to just stick with the basic coefficients that the statistical software will give you. Again, the y-intercept, the slope, the b. I like to stick with the basic ones that they give and not try to make a new curve after that. I like to just take the basic ones and then compare the linear versus the logarithmic versus what we're going to compare in the next few days, the exponential and the power curve. That's more interesting. That's where I think you can get a better feel for which curve fits the data best at a certain point in time. So interestingly, calculating a very, very basic log scale, going back to Bitcoin Pizza Day, May 22nd, 2010, using the X values all the way from January 3rd, 2009. That does matter in the prediction calculations. This logarithmic scale doesn't look that great anymore. It doesn't really fit Bitcoin's price action. So that's going to lead us to the next videos about the exponential and the power curves for Bitcoin. Very last point, I'm going to reset the zoom here. I'm going to go out. Let's put the all-time average back in, and let's put it back to linear scale. So it's linear scale here. We can see the curve now, how it looks on a linear scale. So the price action, the all-time average action, it drops off here. And then from this point, we can just look at the logarithmic regression as it's predicting out according to the model based on the all-time Bitcoin pricing data on a daily frequency going back to May 22nd, 2010, but also taking our x-axis all the way back to January 3rd, 2009 when the system started. This is the curve that it will form, moving all the way out to December 31st, 2030. It predicts, big air quotes in the word prediction, $25,687 Bitcoin price. So higher than it is now. Not much higher. And not much higher than the prediction is from today. So the prediction from today, you see, is $19,217. That is where the trend line predicts it will be. All-time average is $8,500. And the price is just under the logarithmic regression trend line. But the prediction is not much different. Only $6,000 roughly higher. So if you're a big Bitcoin bull, you might not be happy with that. But again, we're not trying to get to if we're bulls or bears here over the long term. We just want to see a curve that fits the data well over the entire period. And I think we can conclude here that the logarithmic regression today, if you just use the basic coefficients that a statistical software will spit out at you, a 34% R-squared is not very strong, and that's even less than the R-squared for the linear regression that we did the other day. So that is the logarithmic regression of Bitcoin price as of January 2023. Thanks a lot for watching.